This is such a proud human of Cirrus Research. A few quick highlights from the latest monthly market observation titled The Briefing. The subtitle of the report is Rate Relief Rally Sets the Stage for the Earnings Chapter. And in this report, we really center on this idea that the market has reacted favorably to the talks of recession and as a result, the rally in rates. That said, as we go through this earnings season, we begin to reset and look to the earnings period coming up. A few of the key highlights. One, this pause on risk rate creates the revival of growth stocks. We saw a dramatic bounce in both large and small cap growth indices. In fact, they were well over 10% for the month of July. What's counter to this and what really caught us off guard was the fact that valuation factors, valuation sensitivity, held up fairly well in a month that was a pure growth stock rally. And the question is why? And this exhibit on the cover actually really leads into what we think is going on, potentially the shift in this market focus. On the left panel, we relate the performance of the interest rate environment, and that is the blue curve in the left panel represents rates using the 10-year, and the purple line in this left panel represents NASDAQ, simple NASDAQ performance. And at the heart of it, in the most severe pickup in rates, what you'll see is probably the biggest correction that we saw in NASDAQ in the last several years. What you'll also notice is this massive recovery in rates, or the rally in rates from north of 3% down to about 2.5%, and at the same time, this major move in the last couple of months with NASDAQ. To the right, though, what we're focused in on, and I think this is really where the market's going to some degree, is where are earnings? And I think we're in clear agreement that the profit cycle is going to slow further. But when we look at the thin blue line here to the right panel, this line represents earnings expectations. And what it's showing is that while they've retraced some ground, it's hard to believe that as this profit cycle is just starting to roll over, it'll stop here. As a result, market expectations are going to focus now more on the earnings-driven world. As a result, valuations are going to remain relevant. And I think that's what we observed in the tape in July. Take a look at the report. Be happy to chat about it. Yeah, feel free to reach out with any questions. Thank you.